Hi guys, welcome to this Moneycontrol live stream. I am Nandita Khemka. Now on Moneycontrol, we are concentrating on portfolio creation with a focus on stocks to watch out for as the Modi government begins its third term. Now after the election verdict, analysts are putting greater emphasis on stock selection with a focus on earnings as well as valuations rather than the narratives. So in our new segment, Stocks for the Next Innings, we put the spotlight on stocks that could offer value and safety for the next 5 years, both in terms of earnings as well as valuations. Now, one of the first major policy decisions of Modi 3.0 was to provide assistance for the construction of an additional 3 crore rural and urban houses under the Pradhan Mantri Aavas Yojana scheme. So today, we are highlighting Aavas Financiers, a leader in the affordable housing finance. For that, let's bring in our expert to discuss the prospects as well as outlook on this particular stock. Join me is Shreya Khandelwal of Nirmal Bang. Shreya, great to have you on the show this morning. Let me first begin by asking you, how does the government's green light of 3 crore additional houses under the Pradhan Mantri Aavas Yojana impact Aavas Financiers' growth prospects compared to its peers like Home First?
All right. Thank you so much for having me here. This sector is such that the government itself is giving a lot of impetus to affordable housing, and the 3 crores housing scheme, which will be directly beneficial to the sector because we'll be able to see a lot of investment coming in for the sector. Now, particularly for Aavas, why Aavas would benefit more than other players in the industry would be that Aavas focuses on customers which are primarily in Tier 2, Tier 3 regions, which are not from the Tier 1 metro cities. The large part of the customer base is in the rural hinterland, and any scheme or any impetus given to that kind of customer cohort would be directly beneficial to Aavas versus others who are primarily targeting a more salaried kind of customer profile.
Now, Shreya, global brokerages are saying mid-ticket segment players like LIC Housing Finance and Canfin Homes will benefit from the revamped affordable housing scheme, right? But how well positioned is Aavas to capitalize on these potential tailwinds? Would you say that it has an edge over players like Aptus Home, the new entrant like Aadhar Housing as well? What would you say?
There are many players in the segment right now, and the space itself is becoming increasingly very crowded. Pan-India lenders like LIC, like PNB, obviously have an inherent advantage because they are well spread out across the country. But why we like Aavas is because Aavas is a very focused play. It is mostly present in the north and central regions. Regions like Rajasthan, they have very strong presence in Rajasthan, even all of North India. So that will help them grow because if you look at the housing market, most of the development has been concentrated in the west and southern markets. So the north and central region, which also contribute a lot to our GDP, have been sort of underpenetrated. So any player who is servicing these regions would be able to grow much faster, especially with the government now focusing on these geographies as well.
Right. Okay. So concentration in the north is something that would provide an edge to Aavas. But let's focus in on the basics as well, right? Give us a sense of the underwriting process followed by Aavas, and what really sets it apart from its competitors. Since you've been following this stock or tracking this stock for quite some time, just thought maybe we'll get a sense from you on that.
So, we have visited a few branches of Aavas in Jaipur itself to get a sense of how things are on the ground. And if I were to compare Aavas's process versus everybody else in the sector, Aavas follows a very detailed, decentralized process of underwriting. They have branch managers who basically go out and meet the end customer, who are sourcing leads, who are meeting the customer, analyzing his entire lifestyle, seeing how much the person is capable of making and how much of a loan that should the person be able to comfortably repay. So that that kind of insight is very valuable because these are customers who are not exactly in the salaried class, who don't really have documents, who are or a salary slip to support how much money they are making every month. So this is like an informal segment which they are targeting. In fact, a lot of their customers are new to credit itself. So that kind of customer category is something that is to cater to this kind of category, you need to have a very focused approach. You need to have some sort of expertise also, which I think Aavas has built, because they were the first people to start with this model, and they have been, whenever they enter a new geography, they have targets for the next 6 months. They do not set targets for the next 6 months. You just get a sense of how the geography is, what are the laws in the land, and what how to basically tap this market. So that sort of groundwork that they've done initially from the start, which is how they've been growing, has really helped them has helped distinguish them against others in the category.
Right. There are two, growth drivers for Aavas, so to say, right? One is the affordable housing loan segment. The other one is the MSME segment, right? So, what is the proportion? What kind of, how much of the business is, catering to the affordable home loan business, and how much of it to the MSME sector? And are they looking to make any changes? Increase focus, perhaps in affordable housing, and decrease some bit of focus on MSME? What is their game plan going forward?
So if you look at the AUM composition right now, around 30% of the book is coming from the MSME LAP portfolio, and 70% is purely housing. From a regulatory standpoint, this 30% can move up to only 35%, so they have that leeway. If I compare it with players across the industry, Aavas at 30% is at a higher end versus guys like Home First and Aptis. Now, if I look at growth, the MSME portfolio has been growing much faster than the housing portfolio. MSME has grown around 25% last quarter. The housing grew only 21%, but cumulatively they're showing growth of around 22%. Now, going forward, what I feel is that because like we spoke about earlier, they know the customer so well that they know everything about the customer. And when you are giving an MSME loan, it is sort of like a cross sell that you are doing. A LAP loan is basically a cross sell or a loan for a consumption purpose that a customer is taking if they already have an existing housing loan. So because they've already done the groundwork with the customer and they know the customer in and out, for them selling a LAP loan is a much easier process.
Okay.
And that is how they have been going much faster, at least in the LAP or MSME portfolio versus the housing portfolio. But apart from that also, they are still very much focused on housing. That's 70% of their book. They want to grow in areas in southern states like Andhra Pradesh, Karnataka, Tamil Nadu, where they don't have significant presence. But again, by opening new branches and expanding in these regions, they will be able to tap that market as well.
All right. That was in terms of business, but let's talk about the financials as well. It reported a 22% increase in its AUM growth on a YY basis. In fact, the management has also pointed out that it's quite confident of achieving that 20 to 25% AUM growth going forward. As a house, what kind of an AUM growth are you factoring in over the longer term? Do you think this growth rate is sustainable, or perhaps it could be even higher than 25% over the next 2 to 3 years?
All right. So see, as a house, we also factor in around 22.5% growth, at least for the next 3 years. If there could be an upside if you have a scheme such as the credit link subsidy scheme that we had, which was discontinued in 2022. So if we have something like this, there would be an upside for the whole sector, and growth would be much faster. But that really depends on how the government goes about it. But apart from that, I think 22% itself is a very strong growth target, and is at least and compounding for the next 3 years, it's still a very ambitious target for somebody like us.
All right, and in terms of spreads, right, Aavas has seen an improvement. Do you think it can maintain spreads northwards of 5% in the years to come, especially amid the increasing competitive intensity, not just from peers but from the likes of banks and NBFCs also?
Banks are not really present in the affordable housing space because they are usually focusing on ticket sizes which are more than 2.5 million. So banks will not be a significant contender here. You would have competition from housing finance players like LICHF, PNB Housing, your affordable housing guys like First Aptus. There is where you're seeing a lot of competition. Now for Aavas, if you look at Aavas's growth over the past 15 months, Aavas itself has been able to hike PLR rates by around 250 bips. In fact, just last quarter, they've been able to increase rates by 25 bips. And this is something that only Aavas has done. No other player across the industry has been able to raise rates as recently as March 2020. So here, Aavas has a significant advantage because again, the kind of customers that they are catering to would be in the tier 2 and tier 3 regions, would be in the rural and semi-urban markets. And these customers are not that price sensitive because there are not many lenders who are willing to lend to this customer as well. So because Aavas is one of those guys who is focusing on these customers, it has a significant advantage in terms of spreads. Apart from that, also if I look at the MSME book, a LAP loan has a yield which is much higher than a housing loan. So if the yield for a housing loan would be around 14 to 15%, but a LAP loan with similar yield would be around 15 to 16%. So if Aavas is 30% of the book is related to the MSME or LAP portfolio, and that book is growing much faster than housing book, then I don't see any challenge for Aavas in terms of profitable growth. So there, I expect them to maintain yields comfortably above 5% and not see that much media pressure versus competitors. And once you have rate cuts coming in, which we expect to happen by the second half of this year, then you'll see the cost of borrowing also come down for the entire sector and Aavas as well. So yields would then give up.
I think you've answered 2 to 3 my subsequent 2 to 3 questions in this answer itself. But since we were discussing competition, just want to highlight, I had spoken to the management of Aadhar Housing at the time of their listing, and the management had made a very interesting comment saying, eventually it will be a 2-horse race in the affordable housing segment between Aadhar and Aavas. Would you concur? Do you think these two are the best placed in the affordable housing market?
Yes, if I look at the macro view that I have, and if I look at where the presence is, again, both of these are significantly concentrated in the north and central regions, which gives them an inherent advantage over the others in the sector. If I look at AUM size, Aadhar is probably the biggest right now in terms of affordable housing players, but Aavas again is not very far behind. Somebody like First would be a little on the other end of the curve because they're much smaller in terms of AUM size. So it would be interesting to see how growth for both of these players pans out.
I want to talk about the valuations as well. Aavas's valuation multiple has contracted quite a lot after the exit of Sushil Agarwal, right? But it still has higher valuation multiples. But you've seen players like Home First who've managed to bridge the gap and are trading at similar multiples. How is Aavas placed in the whole, valuations with the valuations perspective? Because even in terms of ROA, Aavas is behind, if you compare it to players like Aptus as well as Aadhar. How much room for improvement do you see?
So, Aavas Aavas has, in terms of valuation, corrected quite a lot. It's trading at around 2.8 times price to adjusted book, and I think by valuation gives it sometime a multiple of around 3 times price to adjusted book. Now, the upside that I see because would be mostly coming from how Aavas is catering to a very specialized kind of market in the north and central regions, which are significant advantages that Aavas has over any other player in the market. If I look at the sector in general, also the sector itself has derated. Now, when Aavas's valuation came down, everybody else also saw similar correction in terms of valuation, and on a broader level, there is some sort of supply overhang for the sector because you have private equity funds who hold a significant portion of all of these stocks, and they will be now selling their stake. So you will see that sort of correction or that sort of overhang which will remain for the next 1.5 to 2 years as far as valuations are concerned.
Just a couple of questions. In the March quarter, we've seen mutual fund houses load up on this stock, right? I think they've increased their stake by 9%, and even FIIs have been increasing stake. But in the context of the new government and its focus on affordable housing, would you say Aavas is a good bet, and what kind of long-term targets would you place on the stock?
See, I definitely like Aavas. The business model is something that is not been seen across the industry. They've been pioneers in affordable housing and lending. And these sort of advantages have stuck with them despite, management attrition that they've seen. So we have also been, we visited them to understand how things are on the ground, and their culture and the ethos of the place remains the same. Even though we've seen attrition in the past 1.5 years for Aavas. Once that has come out and people have understood that, the culture of the company is still very same. The targets are ambitious again. They want to tap the entire market and they're here to stay. You're seeing now that a lot of people now believing again in the story of Aavas. Now, in terms of from a long-term point of view, I think this sector itself has a lot of opportunity because it's a very underpenetrated sector. If I look at the size of the sector, it's a 29 trillion rupee industry. If I look at the GDP to market penetration of India, it's only around 12%. When it comes to developed economies, is somewhere around 55%. That's how underpenetrated we are. And I think that this 12 can at least move up to 14 over the next 3 years with the help of government and some subsidies or upsides in the schemes they announce. And considering that because they announced 3 crore scheme, I think that even the government itself is very bullish on the sector and it wants to basically invest in it. So definitely a lot of,
Right, and your long-term target on the stock?
No, we don't have a long-term target. So it's a 1-year target.
All right, no worries. With that, Shreya, I would like to thank you for taking out time and joining in and sharing your perspective and insights on Aavas Financiers. I look forward to having another chat with you in terms of this particular sector or even the BFSI space sometime soon. Thanks a lot for taking out time and joining in.
Thank you so much. Thank you.
Thanks a lot. Well, with that, we've come to the end of this Moneycontrol live stream. But before we end, we'd just like to give out one disclaimer for our viewers. We don't recommend buying or selling stocks. You of course need to consult your financial advisor before taking any positions in any stocks. We are just here to help you get through or get to know more about the pros and cons with respect to a particular stock. But of course, it's time out on this particular edition of stocks for the next innings. Of course, I'll be back with a new stock on another day, and till then, have a great time, have a great day as well, and stay tuned to Moneycontrol for all your other news and updates.